Hello, good morning. It is March the 7th, 2023. Right now, let's look at a little chart. This is the volatility index. As you can see, it's kind of trickling down the beginning of the market day here. But we've gotten a few attempts at the 1850-ish area, and we've bounced above this area. But watching the VIX closely, if we see any additional significant downside pressure on the VIX, it may indicate some support with stocks. But overall, when we do look at stocks overall, well, let's also scan out with the VIX. This is a daily chart on the VIX, so you can see that this area has been a level of interest for quite some time. For several months, this area has pretty much held support. We're testing this area like crazy lately, so we're gonna just have to see what happens with that. In the meantime, let's go over to the micro E-mini S&P 500 futures index, and if you look at the daily chart here, we are inside of an uptrend channel. Right now we're testing the bottom end of that channel, and also moving averages are crossing upward. But we did see yesterday we had a spike to the upside, and then we pretty much rejected price when we got around what 40.80. Let's zoom in a little closer to see how this looks. You can see on the 4-hour chart what price action is doing right now. I really don't want to play long with this one, and I'm gonna be pretty careful playing short as well. So what I've decided to do is do a vertical, and particularly a bear call spread. So we're utilizing two calls for a downside bias. Let's take a look at how that looks on Tasty Trades here. So I sold the call, so I went short the call at 40.70. All right, and by the way, this is a 0 days to expiration trade. You can go out further if you'd like to, but I just prefer to do the 0 DTE. I'm already up 11 bucks with this. So here's the 40.70, sold that, and then to make a bear call spread, you've got to buy the call that is further out of the money, and that will make your spread here. So I just had a 2-strike spread, nothing huge. My maximum loss with this one was right around 50 something bucks. My maximum gain is the amount I paid for it times 5. All right, so let's look at what I paid for this futures options contract. The trade price was $3, and that's because I was credited. That's because I was credited here $9.50, and then I was debited $6.50. So that's a difference of $3. So I got a $3 credit at the beginning of the trade. So 3 times 5 is 15. That's my maximum credit is $15. All right. Now I was just up 11 bucks. I probably should have got out right then and there, because that's almost all of my. Well, it's kind of going back and forth. I may put on an order just to go ahead and try to get out at right around a $12 gain, because that's pretty much most of the maximum credit anyway. But I mean, you could easily do this same trade and widen your strike prices. So you could easily say, okay, well, instead of going 40.80 here, You can go to 40.85. You can go to 40.90. Anyway, the more you do that, you'll have a maximum profit of a little bit more, of course, and then also your maximum loss will be a little more too. Let's take a look at how that kind of looks. Okay, so let's try to stick with the same 40.70 strike price. That's what we're selling here. And by the way, if price action at the expiration is below 40.70, that means I'll get maximum profit for this trade. So that's basically how that works. Your 40.70, and then whatever your spread is will determine, and a lot of times will determine, depending on the pricing of the contracts, will determine what your maximum gain can be or maximum loss. But you will get maximum, your maximum gain or your maximum profit will be recognized, or you will get that if price action is below your sell strike or your sold call here in this case at expiration. So a good rule of thumb is if you're like at 75 or 50% of your maximum profit, then in a lot of cases people will say, okay, well, it might be a good time just to go ahead and just take profit and keep it trucking. So, you know, it's pretty early in the trading day, and I'm doing pretty good with this position. So I might just go ahead and do that. You know, go ahead and recognize my profit and call it a day. But let's pretend like we're going into this position brand new. All right, so I'm going to sell. I'm going to sell at 40.70. So we go to I'm not seeing a reaction here. Let's try this again. All right. So what I want to do is sell at 40.70, and then I want to buy. Let's go out a little further. Let's buy at 40.90. Just I want to show you how these numbers look, okay? So in this case, we have a buying power effect of 118.50. All right, that means that your available margin is going to be reduced by 118.50. It sets a maximum loss of $90 and a maximum profit of $10. And this is a 0-day expiration trade. Your probability of profit is very high with this. That's why your maximum profit is less. Now, one thing you have to keep in mind when you see this maximum profit is that you do have to still pay commission. Your commission for this is going to be right around $1.50 a contract, and then some extra change. So maybe you can say $4 for this type of two-leg strategy, a $4 commission cost. So if you were to deduct that from your maximum profit, your balance is like $6 in this case. Is that enough? I don't think so for risking 89, $6. Not for a 0 DTE. I wouldn't do that. So what I would do is probably just be a little more risky, make my probability a little less. So I could do that by moving my sell strike call, my strike price, I can move that strike price for the sold call closer to the money. So let's move it in this case to 40.50. All right, so if it's up to 40.50, and we leave the spread at 40.90, so you got now in this case you got a pretty wide spread in this case. Your buying power effect is 227, maximum loss is 170, maximum profit is $29. All right, so you could play it that way. You could say, hey, I think we could still get this. This probably could still trek towards 4,000. We still may go to the downside with this. Let's go ahead and just butt up against current price action. All right, so if we do that, and then we move this 40.90 up, let's say 2 strikes wide, you see here, you've got buying power effect of 78 bucks, maximum loss of 40 bucks, and maximum profit in this case, well, maximum loss of 34 bucks it says. Maximum profit in this case of 16. It's kind of changing with the quote prices, but I would take the lower number in this case. Let me move out a little bit, see how we look. That looks really good. You got a 66% probability of profit. It's fluctuating a little bit. It's going to do that when you've got quotes that are changing constantly. Your maximum loss, 52 bucks, maximum profit 23. All right, and that maximum profit all boils down to where you get filled at. So it's always going to be 5 times your price that you're filled at. Down here at the bottom where you see the mid price, I could put a limit order in at 465. So 465 times 5 will be my maximum credit, or my credit when I go into the position, and that is your maximum profit, which is your credit. So this looks, you know, this looks good, except for the probability being a little low, being around 70%. So you may want to play around with it and say, okay, well, I'd rather have a higher probability. You know, I like to look at the chart action, the price action on the charts, because it really helps me to really gauge, okay, well, if price action does go above a certain threshold, then I want to be out of that thing, you know. So in this case, if I would say if price action gets above 40.70 today, then I'll cut my losses. I'm done, you know. So I could do a 40.70 spread here. I can sell the call at 40.70 and buy the call further out of the money, and you know, see where it takes us, you know. But when we look at this chart here, you can clearly see that we are ticking to the downside. So that's great, you know, for this type of strategy, to put on this type of strategy. It's a very easy peasy strategy, and I mean, this is the 1 hour chart for MES. So now I can go to my trade right now, and we see it's pretty solid at around 11 bucks right now. My maximum profit is, what was that maximum profit? 15 bucks. I believe I paid for, I believe I was credited. Yep. So 15 bucks my maximum profit. I'm at 11 bucks right now. I'll watch this for a little bit, but I'm really inching towards going and getting out of the position very soon. And what I'm going to do is just continue to watch price action. If I see price action start to retrace from this downside move, then it's my opportune time to go ahead and get out, because I've already achieved, you know, over 60% of, well, over a third of my goal, which is of course maximum profit. I've already achieved that. So with that being said, thank you for watching the video, and I hope to produce some more videos to you know, to help the trading world out, explore how options can be incorporated in your trading plans, and help you build financial wealth. Thank you so much. Talk to you soon.